it's all about the business, money, and well, the economy. As always, it's interactive, and we'd love to get your thoughts. If you'd like to send a message across, you have a thought or an opinion you'd like to share. The WhatsApp number is 0809 444 981. You can also tweet at smooth981. And we're also streaming live on our YouTube channel, so you can catch the live stream up on YouTube. It's Smooth 981. And we're talking about investing in Nigeria's money market and fixed Shaibu. David is an emerging market fixed income and currency trader to Business Express.
Thank you. Thank you for having me here.
Awesome. Awesome. It's our pleasure. So, David, let's get straight into the conversation now. Nigerians might be, or some Nigerians might be looking to securities, money market securities. Are the rates encouraging to lure them in?
Okay, yes.
David?
Of course, the rates are currently encouraging. We've seen the last three auctions, or even more than three auctions, actually print at around the 20.7 benchmark, and prior auctions even printing as high as 21.49%, right? These are historical high levels, and we've never seen the Nigeria Treasury bills yield as much, right? The corresponding yield for a 21% would be somewhere around 25-26% in terms of yield. So very good investment for a risk-free instrument. Quite encouraging. Yeah.
All right, that is good to know, at least for people who are thinking of taking the plunge. Now, can we attribute the current rate environment to the CBN and raising the benchmark rates?
Yes, of course. That's
David?
Sound judgment to make. This year, we've seen the central bank increase interest rates multiple times. We saw the first hike somewhere around February, where the Monetary Policy Committee, in a bid to combat inflation, increased the policy rate by about 400 basis points. And the next policy meeting after that, we saw another hike. The monetary policy rate is a very good anchor for where you see the current discount rate in the treasury bills and the bonds market, right? As all rates are expected to feed from the policy rate. So given that the central bank has increased the policy rate this year, that's a significant driver, or one of the key drivers of the current rates you can see in the bonds and the bills market.
Mm-hmm. All right, let's start with these primary market auctions.
Okay. So you want to take that again?
Can you hear me? All right. Okay. Seems like our signal is not so great this morning. Starting off with the money market and treasury bills. Now, who can actually participate in these primary market auctions?
Okay. So the primary market auction is open for the general public, individuals, firms, and even government institutions can actually participate at the auction, right? The minimum size for participating at the auction is about 50 million 1,000, and you might want to lay concerns around individuals raising that much. That's not a problem, because most financial institutions, banks and non-bank financial institutions alike, they actually have rooms for retail outlets where different retail individuals commingle funds or pool resources together to meet that minimum benchmark. They bid at the auction, and everyone gets allotted to the bid they contributed to that pool of funds, right? So it's open to the general public. Individuals can participate. You and I can participate. Firms can participate, and even some government parastatals even participate at the auctions.
All right, we're speaking with David Shaibu, and if you'd like to send a message across, the WhatsApp number is 0809 444 We're also streaming live on our YouTube channel 81. Okay, so let's talk about regular folk like you and I. Is the secondary market the more affordable option for them or for us?
Okay. Yeah, so the
David?
primary market and the secondary are like, can you hear me now? So the primary market and the secondary market
Yes, I
are
can
quite
now.
affordable. Okay. Yeah, so both markets are quite affordable. And I mean, there's this conception that the secondary market should be more affordable. Yeah, quite frankly, most institutions place the limit for participation at very low figures. Even with as low as 100,000 naira, you can participate in the secondary market. But like I explained, even at the primary market, you can commingle funds with other retail individuals, right? Your banks and non-bank financial institutions like the asset managers. Zedcrest Wealth is an example of that. Institution that can actually help to commingle funds and whatnot, right? So ideally, both markets should be quite accessible to a very similar extent. But yes, the benchmark for participating in secondary markets individually is way quite lower than the primary market option.
Okay. Now let's talk about the rate. Now the rate on the 364-day paper is about somewhere around the 20% region. Do you think that this could possibly even go higher?
Oh, of course. Um, do I think it could go higher? Yes, the rates could move in either direction, upward or downward. But we've seen quite recently that the debt management office is quite comfortable at those 20% benchmark levels because the rate you see as returns, right, to you giving the government your money, right, is actually a cost to the government, right?
Mm.
So the cost appetite of the debt management office and the federal government are like it's somewhere around this region for now, right? So could it possibly go higher? Yes. Should there be need to raise significant volumes like we've seen in the early part of the year, right, where we've seen several auctions where the amount on offer was northward of 1 trillion, right? Then that possibly could take the rate even further higher, right? But in the more recent light, in light of the, I mean, the comfortable levels for the debt management office, it looks like this region is where they are comfortable at, and it looks like the trajectory will be maintained.
Mm. Now, what about the retail saving bonds, though? 5,000 naira entry and 18% respectively. How attractive are these for investments?
Okay, they're quite attractive. Like I said, the minimum size for the, I
David?
mean, I can hear you. So I'm saying they are quite attractive, right? Because given the minimum size for participating at the primary
Mm.
auction for sovereign bonds and the treasury bills, right? Not a lot of people can afford that. And instead of going through the hassle of the commingling process and all of that, right, the retail savings bond is quite an attractive alternative, right? Where with as little as 5,000 naira, you can participate at the auction and get decent levels, right? Yields of 17, 18% alike. So I think, I mean, given the size of the investment, right, the returns ascribed to that category of investment instrument is quite rewarding to the ordinary retail investor who would typically leave their funds in their savings account and earn at around 3%, 4% returns. You're currently going to earn at around 17, 18% returns. So that's quite impressive.
Mm. Let's talk about sovereign bonds. What's the story with their rate trajectory?
Oh, okay. So we've seen in the bonds market this year, we've seen levels, kick up from around 15, 16% at the early part of the year in January. And given the size that the government had to fund in its budget deficit for this year, and also the ways and means securitization, which has been been discussed for some time now. And the government was looking to securitize and still looking to securitize a huge chunk of the ways and means figure in 2024. So as a result of this, we've seen huge and tremendous supply in the bond market, where the federal government, through the Debt Management Office, has raised quite a lot of funds, right? We saw the February auction where $1 trillion was on offer for the treasury bills. Even the bonds market, we saw generous volumes even being sold and issued at the auction, right? So this year has been quite impressive. We've broken psychological barriers of historical highs. Before now, there used to be this saying, right, in the financial markets, right, that for bonds, right, 16, 18% is like the psychological barrier. Once you get there, everybody likes to sell off, right? Because the likelihood of rate getting beyond that was very slim. But this year, we've seen, because of the sizes, large sizes on auction, we've seen the market break those barriers across 16% in January, across 18% in February, even got as high as 20% in March, right? So the bonds market is, really quite rewarding for the individual investors and the corporate institutions who are looking to put money into safe instruments and get high yielding returns. So, that's the summary of the trajectory for the year.
All right. So how can a person get into sovereign bonds at the secondary level, and what will be the entry point for that?
Okay. So to do that, you are to, it's just as simple as contacting your banks, really. Contact your banks, or if you are, on board with several asset management institutions, yes, of course, you can actually speak to them about your interest in participating at the sovereign bonds secondary market. And they'll provide you details as to their requirements and the rates at which it will be yielding, right? So the entry points are your banks and your non-financial institution, where you can get easy access to these instruments.
All right, I've got a message coming through, and this is from Ahmed, and he says, does it mean that banks that sell treasury bills are not at primary markets? Are not primary markets? Where can individuals buy the treasury bills?
Sorry, I didn't get that. The line is breaking a bit.
Did you get the question?
The banks that sell?
Okay.
No, can you repeat?
So he says, he says, does it mean that banks, the question. So he says, does it mean that banks that sell treasury bills are not a primary market? And where can individuals buy the treasury bills?
Oh, no. No. So banks that sell treasury bills, right, participate both at the primary market and the secondary markets, right? Individuals can also contact the banks to help them participate at the primary market and the secondary market. So the bank participating in the secondary market just means that they are enhancing the liquidity of that market, right? I go to the auction and buy directly from the government. And when I want to generate cash for my liquidity needs, right, I don't necessarily have to struggle, right? I can call up the banks to say, I want to sell this position. And then they, on their own side, buy it from you and also resell it to other individuals who did not participate at the auction and are looking to key into the market, right? So the banks participate in both markets, and individuals can also participate in both markets depending on what they are trying to achieve.
All right. Thank you so much, David Shaibu, emerging markets, fixed income and currency trader at Zedcrest Capital. Thank you so much for being with us this morning.
Thank you for having me. That
is it for Business Express. Do stay with us. There is a lot more to come on the Smooth Breakfast Express. Brought to you